Now is the time. If you've been on the fence about buying a house and trying to time the market, I am going to tell you why. Believe me or not, but I have seen this one before. If you've taken any basic economics classes, you know that high demand plus low supply equals higher prices as people throw money at a product. In this case, that product is a home, and they will escalate these prices in order to win it. I can see this cloud on the horizon, and it's coming quickly. The housing market is about to take off again. My name is Mary Schumann. I'm a realtor here in the Minneapolis area, and I bring you information that you need to understand the market here, what the neighborhoods are like, and what it's like being dropped into Minnesota as an outsider, because that happened to us about 8 years ago. So I'm still trying to help people figure that out. I often get asked questions about when is the best time to buy, and these questions are really often kind of oriented around the seasons. In particular, do people move in winter in Minnesota? People in other parts of the country really seem to fear the winter here. When I'm speaking to people in the South, and by the South I just mean south of Minnesota, which pretty much means everywhere else, people are always asking me if moving is something that people do in the winter, and the answer to that question is a resounding yes. People move all year long. Winter is not something that changes the way that we live here, other than really dressing for it. We still go to work, we go to restaurants, we walk dogs, play outside, and people move house. Moving in winter, particularly this winter, has its advantages. This year, if you're flexible about when you can move, I would encourage you to consider moving soon. And I'm about to tell you why. The reason is that while the inventory of homes is still quite low right now, so are the number of buyers that are competing for the same homes. We have a combination of factors. First, of course, is that people are still in that kind of hazy, sleepy holiday mood. They aren't quite back to business, and that means that there is opportunity for you if you're a buyer and you're not wanting to compete with a bunch of other people for a home. The second thing is that people are still in some sort of interest rate shock after the deep lows that we saw a couple years ago, and then with the fight to bring inflation down, causing mortgage rates to rise to a high of 8% at their peak, it really kind of stopped people in their tracks and stopped them from being willing or able to buy. But if you've been paying attention recently, you'll know that 8% is in the past now. If you have good credit, a decent down payment, and a low debt to income ratio, you are in great shape, and you're probably going to see rates around 6.5%, and that's right now, if you go with the right lender. Another factor is that many lenders are offering no-fee refinances to people that get loans at a higher interest rate now and then see the rates drop in the future. So you are protected on that end if you go with a lender that has that product. This is definitely something that you'll want to ask your lender about. Right now, homes have been sitting on the market a little bit longer, and sellers are wanting an offer and likely not expecting a ridiculously high offer. Homes are at a median days on market of 38 right now in the 7-county metro area, and this includes all housing types: condos, townhomes, single family, even new construction that hasn't been built yet. This is a rate that it has been sitting at for about a month or so. This is up from 27 days at the height of the market for all of those things combined at that time. But you'll also want to look at this graph if you're interested in single family homes. In the height of the market, we were at only 9 days, including contingencies, which means, 7 days of inspection or whatever, plus a few days on the market before getting a contract. And we only rebounded to a high of 16 days in August before that time started dropping again. We are now at only 14 days on market. And I predict that this is going to drop even more as rates continue to improve and buyers start getting more active with a limited supply of homes available. Right now, sellers are more likely to negotiate with you. You can get an inspection, you can have the seller fix things or contribute to closing costs in order to compensate you for what you find. You won't likely have to offer over asking, although we are still seeing multiple offers on really great homes that are priced right. So I am not promising that. It's less likely right now. You also won't need to probably supply appraisal gap coverage clauses. If the appraisal comes in low, you'll be able to negotiate. You can have a solid understanding of prices and what your out-of-pocket costs will be. Sellers are still getting about 100% of asking price, but this is a big improvement over 2022 when people were paying an average of 5% more than asking. You do the math on that. That can really add up on certain types of homes. All right, so why am I dragging 2022 back into this in 2024? Hasn't the market just fallen apart? That was a bubble. No, it wasn't. We still have very low housing inventory to sell. And if you look at this graph showing 2020 through today, you can see the drop off. We have not yet recovered. If we break this graph down into just single family homes and include new construction, we have just over 4,000 homes. And if we exclude new construction, because some of these are for sale but are currently only a lot, we only have 2,700 homes to sell in a 7-county area. That's not a lot. The predictions for interest rate reductions are sure to unleash pent-up demand for homes. We had rates as high as 8% in October and 7.5% in November, and the Fed has signaled that they are likely going to drop rates throughout the year, estimating 3 times. And various mortgage companies have predicted that we will see rates between 5.75% and 6.5% this year. If this happens, many more people are going to be competing for the same limited housing inventory. And while this is a big improvement for buyers from an interest rate perspective, it may not seem low enough to incentivize people to sell their homes in great numbers if they have a good rate on their current mortgage. So I don't really expect supply to increase except where new builds are happening. All right, let me know what you think the market will do. Is it going to get better or worse for buyers this year? What do you think is going to happen with interest rates? Are we looking for another gangbuster 2022 style market? I love talking to people that meet me on YouTube, so please reach out if you have questions. I would love to chat. If you're not convinced, that's cool, but don't say I didn't warn you. The spring market starts when the Super Bowl ends. Are you going to be in the game?